Hey folks, it's Jeremy Whaley here, and I want to talk to you about one of my absolute favorite strategies in the world. In fact, it's a strategy I have teased and called the perfect strategy. Now, is it possible to have a perfect strategy? What if you had a strategy that would make money if the stock went up, and if the stock went down, it could also make money? Wouldn't that sound almost perfect? That's what I want to talk to you about in this video. So if that sounds interesting, hang around. Let's go. Hello, everybody. It's Jeremy Whaley here from Trade Maestro. You can check us out over at trademaestro.com. And just recently, I've had quite a few people asking questions. You know, the market's been kind of a little bit wonky. We've been going through a lot of earnings reports, and there's just been a lot of volatility, but it's been going both directions. We'll have big trades that run up and then run back down the opposite direction. It's kind of been a frustrating time to trade. So I wanted to share a couple strategies with you, and specifically one in particular that I often refer to as the perfect strategy, and see if maybe this is a trade that you're interested in taking. And if it is, great. If it's not, then it's no big deal. I do want to say this is a trade that I've been doing for years. I learned it was one of my first option strategies that I learned almost 20 years ago, actually more than 20 years ago now. And I've been teaching it for more than 10 years. And it's one of those bellwether strategies. So it's a really good one. It's pretty simple to execute, and you don't even really have to be an advanced options trader to understand it. So let me break it down for you. Let's take a trade such as this one right here on Tesla. And you notice that the trade has come into kind of the apex of a triangle. Now, if you know anything about triangles, you know that this trade has to go somewhere. It either needs to break to the upside or it could break to the downside. The truth is, you have no idea which way it's going to go. Depending on who you listen to, some people say triangles always break up. Other people say triangles always break down. And then this is a descending triangle. Do descending triangles break down? Do they break up? Does it matter? And the answer is no, it doesn't matter. What really matters is that you're positioned so you can take advantage of it. Now, the question is, how do you know? Do you know if this is going up? Do you know if it's going down? Of course you don't know. So what if you could do both? Now, how could we construct that with an option? Here's the way we do it. You start off with a call option. Remember, a call option gives you the right to buy the stock at a specific price. And so if the trade goes up, then that call option is going to go up in value. But what could we do to make sure we make money on the trade if it goes down? And the answer is we're going to buy a put option. Remember, a put option is going to make money if the stock goes down. So let's just remind ourselves of how these options work. A option gives the buyer the right, but not the obligation, to either buy or sell the specific stock for a specific price on or before a specific date. Now, in the case of the call option, it's the right to buy. So why would we use a call option? We want the right, but not the obligation to buy the stock. Well, if the stock goes up, we're like, yeah, I wish I had bought it. The call option gives you the right to do that. Now, if you flip that and you say, why would I want the right to sell the stock? That's what a put option does. A put option gives you the right to sell the stock at a specific price. Well, if the stock suddenly went down, you're thinking to yourself, man, I sure wish I could go back in time and sell at a higher price. Ding, ding, ding. That's exactly what the put option gives you the right to do. So when we do this, what we have constructed is something that we call a straddle. And with a straddle, basically you buy both a call and a put. You're going to buy at the same strike price. And here's the cool thing. You have an equal odds. Probability-wise, you have an equal probability that either position is going to become a winner. So if you look at this on the chart now and you think about that trade, here's that triangle where the trade has come into this triangle and we've executed a straddle. We buy a 380 call and we buy a 380 put option. Now, here's the cool thing. If the stock breaks to the upside, boom, our 380 call is positioned to make a profit. And if the trade breaks to the downside, boom, our 380 put is positioned to make a profit. Now, you say, well, how does that play out? And this chart right here shows you exactly how it plays out. The only way that you could reach maximum risk is if the stock closes exactly at 380. I kind of went quickly through those accidentally. Didn't mean to move so quickly through that last slide there. But if you just take a look at that picture right there, up and down, If it goes up, you make a profit. It goes down, you make a profit. Here's your risk profile, 380 exactly. Now, what are the odds? What are the odds at expiration that those options, that stock, I should say, is going to close exactly at $380 a share? And the answer is not very good. I mean, it can happen, but statistically, it's not going to happen. It's going to move one way or the other, especially when you come into the apex of a triangle like that. So it's a really cool strategy. There's a lot of different ways that you can execute it, a lot of different use cases for this strategy. Over earnings is one of the biggest ones. Something big is probably going to happen over earnings. It's probably going to gap one way or the other. And a straddle is a perfect trade to use there. There's a sister strategy that goes with it. It's called a strangle. You got a straddle and a strangle. And if you try to say them at the same time, it comes out strangle. Straddles and strangles. The strangle is the sister strategy, very similar. And if you want to learn more about how to do these, guess what? I did a complete training on this. It's an in-depth training called Trading with Straddles and Strangles, or shall we call them straddingles? I don't even know how I said that now. You might be thinking, hey, that's going to be really expensive, but it's not. It's included in my main membership here at Trade Maestro, the Maestro membership, where you can get access to everything. You get access to over 20 different courses, individual option strategies. If you're a beginning trader, we've got stuff for you. If you're an advanced trader, you want some strategies and different ways to look at different things, then we've got that for you as well. If you're looking to manage a portfolio, maybe work with some ETFs and kind of balance out a retirement view, or maybe you're looking for really active income ideas, it's all included here in the Maestro membership. And not only that, you get the group coaching live and you get our live Sunday night profit picks. It's a perfect combo. So if you want to learn how to do strategies like this one, the straddle and the strangle, and go in depth on this one in that straddle and the strangles course, or look at some other strategies that are very similar to this, then check us out over at trademaestro.com. When you get ready to do it, all you need to do is go to your web browser and type in trademaestro.com. And it will take you to our website and you can look around and see what is going on. Hey, listen, if you haven't done so already, like and subscribe to this channel. Be sure that you are getting the alerts and the notifications so you can know when a new video comes out. You can learn about straddles and strangles, or maybe I'm going to drop another strategy next week. You never know. Maybe I'm going to talk about butterflies, or maybe I'm going to talk about credit spreads. You have no idea. So that's why you need to have your alerts on so that you know exactly when I post a new video. All right. I hope you've learned a lot from this. If you got any questions, please type them below or send us an email, jeremy@trademaestro.com. And until next time, happy trading. We'll talk to you soon.